Hey, it's Addie, and welcome to Peace of Mind Planning. Today, we're going to talk about the number one reason why you should create an entity for your business. I won't leave you hanging. It's called limited liability. Stay tuned to learn more about this. You're watching Peace of Mind Planning. I'm Addie Pruitt, an estate planning lawyer, and among other things, I help busy parents in Louisiana to plan their life and legacy through estate planning without overwhelmed confusion or a whole bunch of legal jargon. I myself am the parent of two small boys and live in New Orleans with my husband. All right. First thing, just wanted to tell everybody out there, hi. Let me know if you're listening, joining us live, where you're watching from. And if you're not joining us live, you can also let me know where you're watching from. Drop a note on the comments. But let's go ahead and get into it. So the first thing I wanted to talk to you about was, do you need to form a business entity to run a business? And the answer to that is simply no, you don't. Maybe you want to start doing work immediately and you don't want to worry about creating the entity. So you just call yourself Smith Consulting and you get ready to go. Well, the IRS would consider this it's not really an entity, but this thing an unincorporated business, a sole proprietorship. That's what we're going to call it, a sole proprietorship. If you're doing this, you're reporting all your income on your personal income tax return on a special schedule. You don't have any separate income tax filings. You can still file for sales tax if you need to. And so you might be thinking, hey, Addie, that sounds pretty good. Like, why don't I just do that? And so that brings us to the whole reason for this conversation. And it is that when you form a business entity, you get limited liability. And limited liability is really good because it protects your personal assets like your car, your house from business debts. So the way limited liability works is when you form the entity, you're going to put things into it. Probably money is one of the things to capitalize it. And in return, if you treat that entity like a true entity, something separate from yourself, then you get this shield of limited liability that protects your personal assets. So that sounds great. Now, maybe you're thinking, Hattie, I didn't put that much money into the business to start. I was just starting out. I didn't really have anything. Well, I mean, that's one of the things that you have to be careful with. So to get this great shield of limited liability, you have to do certain things. One of which is you have to adequately capitalize the company. Say that 3 times fast, right? And that just means you have to put enough money into it to run the business. And you might be thinking, Addie, how much is enough? Well, I'm going to give you a very lawyerly answer, and that is it depends. It depends on what type of business. It may be 1,000's enough. It may be 10,000's enough. It may be 100,000's enough. It just depends on what type of your business you're running. But for most small businesses, the adequate capitalization is not the thing that really trips them up. The thing that trips up most of them is not respecting the separate entity of the business. So not doing things like getting the business its own checking account. Writing that check for money into the business as a capital contribution from the owner to the business. Not keeping good books and records. It's okay, when you start to do your bookkeeping with a spreadsheet. I like spreadsheets. I'm a big fan, but eventually you might want to get something a little more sophisticated, like QuickBooks or Xero or something like that. And probably the thing that most people do is paying business debts with personal money. So your personal credit card, your personal debit card, your personal money. You don't want to do that. You want everything to be separate. 2 separate things, separate entity, keep things separate. If I can impress upon you anything in this conversation to help with your limited liability shield, it is to keep business and personal things separate. So what happens if you aren't careful? Well, courts have this doctrine they created called they can pierce the corporate veil. Sounds very mysterious, right? But what it really means is if you aren't respecting that separateness of the entity from yourself, a court's going to say, no, that entity is just your alter ego, and we're going to go get your stuff to satisfy this debt. That's absolutely what you do not want to happen. That's worst case scenario. So by doing all these things we talked about before, respecting corporate formalities, paying things separately, all that goes towards creating that limited liability legal shield. Now, a common question many people have asked is, okay, so if I'm going to get a loan from a bank and I have this entity, then the bank can't come after me personally? And theoretically, the answer to that is yes. I say theoretically because from a practical perspective, most lenders are going to make you sign a personal guarantee saying that, yes, even though this is a separate entity, I, Addie Pruitt, agree to backstop and be liable for any of the debts of the business. So you're like, if I'm not getting this limited liability for this like lending, when would I ever need that? Well, one circumstance where it could come up is, let's say you have a slip and fall at your business. Hopefully, you have insurance, which you should most definitely have. But the debt exceeds the policy. Well, in that case, if you were treating it like a business, everything had your corporate records. A court would not be able to come in and pierce that corporate veil. They would say, no, no, no. The only thing you can get are the business assets. You can't go and get their personal assets to satisfy this debt. So that is a great way to just give yourself some extra layer of protection when you are running your own business. Another question that's come up is, I have this rental property, so I formed an LLC for it, but we never transferred the rental property. The LLC does not own the house. Well, there's no way for you to get limited liability with respect to that house except for when the LLC owns it. So, that's another that can raise a flag of issues. If there's a mortgage, you're probably going to have to refinance to get the lender to agree to the transfer. But, it's just like everything else, making sure that you are respecting the two separate things and not trying to use this, entity and not actually respecting it as a separate entity from yourself. So that's a lot in a very short period of time about limited liability. Obviously there are books and whole law school courses written about this. I know I've thrown a lot at you right now. If you have any questions, though, you are always welcome to send me an email at info@addiePruittLaw.com. Make sure you tune in to listen to the answer. And as always, be sure to follow, subscribe on your favorite platform so you never miss an episode. I'm on Facebook, LinkedIn, and SoundCloud at Addie Pruitt Law, and on YouTube at Peace of Mind Planning. And if you want to catch up on any of the old episodes, I think there are 7 out so far. So woohoo, almost to the number 10. I feel like that's some kind of milestone. The easiest way to catch up on everything is to go to my website. I'm going to throw the address up here. It's addiePruittLaw.com. And if you click on Peace of Mind Planning, you can access all the old episodes. I would say the last 2 are particularly good. I had my 3-year-old co-hosting, so there was a lot going on, to say the least. And while you're there, you can also learn a bit about me and my practice and, how I can help you. So that's all I have for you today. Take care and have a great day. I'll speak to you again soon. Bye.